Hello everyone. Welcome to the last session of MCQ of Part A. Part A of your board exams means today we will be winding up with the MCQs of volume 1 and 2, which comes in Part A from question 1 to 16 of 1 mark each. So from question 21 to almost 135 or 36 of the study material given in the description has been already done in the past sessions. Now only first 20 MCQs are remaining that we will be winding up today. So take out your pen, paper, gear up. Let's start solving the first 20 MCQs. Look at the first one. Anthony, a partner, was being guaranteed. Anthony has been guaranteed. Okay, Anthony has been guaranteed that his share of profits will not be less than 60,000. So he has been given a guarantee of 60,000 rupees. He has been given a guarantee of 60,000 rupees. Deficiency, if any, was to be borne by other partners, Amar and Akbar, equally. Okay. Equally, they are going to bear the deficiency. For the year ended 31st March 2024, the firm incurred loss. In red, I am highlighting it. The firm incurred a loss of rupees 1,80,000. What amount will be debited to Amar's capital account in total at the end of the year? Now, understand this Amar's capital account will be debited with what amount? First of all, Amar's capital account will be debited with the share of loss of 80,000 plus he is also going to bear this deficiency that also we will debit to Amar's capital account. So what will be the total amount we have to debit to Amar's capital account? Let us find it out. Okay. Very first, what is Amar's share in the loss? Okay, what is Amar's share in the loss? For that we have to debit his account. Loss is 1,80,000. Okay, loss is 1,80,000. Is any profit sharing ratio given in the question? No. In absence of any profit sharing ratio, we'll assume three partners distributed equally. But because Anthony, let us assume third partner, Anthony doesn't bear any loss. So between two partners, 1:1 means they will bear the loss half, equal ratio. So 1,80,000 half. 1,80,000 half. What is the share of loss of Amar? 90,000. And deficiency of this 60,000 entirely is a deficiency. This all of you can see 60,000 entirely is a deficiency. Reason? There is a loss in the firm. So loss will be borne by Amar and Akbar only. Plus they have guaranteed 60,000 to Anthony. So that also is the deficiency which Amar and Akbar have to bear. So what will be Amar's share in the deficiency? Entire 60,000 is the deficiency. Since they are going to bear it equally, there also 60,000's half equally. The deficiency will be equal to 30,000. In short, 90 plus 30. Amar's capital account will be debited with the total amount of 1,20,000. You can do it directly also. 180 plus 60, 2,40,000 half. But I have shown it separately because it is quite possible that profit sharing ratio is not 1:1:1. Suppose it is 3:2:1. Then the loss share would be borne in the ratio of 3/5, 2/5 between the two partners. And this they have decided to bear equally. So this 60,000 only half is to be done. So I'm showing it separately because these two ratios can be even different. These two ratios can be different also. That's why I've shown it separately. But we are going to debit it with what amount? 1,20,000. So B is the correct option, 1,20,000. Okay. Going to question number 2. Assertion and reason. So let's read one by one and identify is it true or false, as we have done in earlier many questions. Okay. Partners' current accounts are opened. Current accounts are opened when their capitals are fluctuating. Wrong. No. When do we open current account? When the capitals are fixed, not fluctuating, but rather fixed. Okay. So assertion is false. Assertion is wrong. Reasoning: in case of fixed capitals, all the transactions other than capital are done through current account. Yes, this is true. Okay. In fixed capital, only capital transactions go in partner's capital account. All other transactions of drawings, interest on drawings, interest on capital, salary, bonus, etc. are routed through current account. So this statement is true. Now, what is the correct option? Assertion is false, but reasoning is true. Both A and R are true. No. Both A and R are true. No. A is true. No. A is false. Yes, A is false, but R is true. Option D is the correct answer. Okay. A is false, but R is true. Now going to question number 3. Forfeiture of shares leads to reduction of dash capital. Now forfeiture of shares will lead to reduction of subscribed capital. Okay. Subscribed capital, called up capital will decrease because of forfeiture of shares. Option C, subscribed capital. Then question number 4. Moon Limited issued 40,000 10% debentures of rupees 100 each face value at certain rate of discount. Means rate of discount is what is missing and we have to find in the question. Okay. And were to be redeemed at 20% premium. Now how much will be 20% premium of 100? 20% premium will be 20 rupees. Okay, 100's 20% premium will be 20 rupees. Existing balance of securities premium before issuing of this debentures was 12 lakhs. Before issuing the debentures, there was a balance of 12 lakhs. So security premium will be utilized first in writing of the discount as well as the premium on redemption of debentures. Both these are loss for the company. Both of these are loss for the company. Premium on redemption as well as discount. Both will be written off in first priority from securities premium account. Okay. And after writing off the loss means this discount also. Okay. After writing off the loss means this discount also and this premium on redemption also. They are both the loss. And issue of debentures, the balance in security premium account was 2 lakhs. Now, after 12 lakhs, it is reduced to 2 lakhs. What does that mean? 10 lakh from security premium has been utilized in writing of the loss. Before the issue of debentures, it was 12 lakhs. After writing of both these losses, the amount remains is 2 lakhs, means 10 lakhs has been utilized in writing of the loss. At what rate of discount these debentures were issued? Let's solve it. Okay, first, what is the security premium balance before writing of the loss? What is the security premium balance before writing of the loss? 12 lakhs. What is the security premium balance after writing of the loss? 2 lakhs. Okay. What is the security premium balance after writing of the loss? 2 lakhs. It means how much of loss is written off? 10 lakhs. Now what does this loss include? What does this loss include? Loss includes discount as well as premium. Discount is what we have to find. Discount is what we have to find. But premium on redemption we know is 20 rupees. Discount we have to find, but premium we know is 20. So 40,000 into 20. What will be the premium on redemption? 8 lakh rupees. Premium on redemption of debentures would be equal to 40,000 debentures into 20 rupees. That is 8 lakhs. Out of 10 lakhs, 8 lakhs is premium on redemption of debentures. It means remaining 2 lakhs must have been the discount on issue of debentures. Okay, Therefore, the total loss written off is 10 lakhs. Out of 10 lakhs of loss, premium on redemption is 8 lakhs. It means remaining 2 lakhs is the amount of discount on issue of debentures. Now, how many debentures are there? 40,000. So 2 lakhs divided by 40,000. What is the discount per debenture? 5 rupees. What is the discount per debenture? 5 rupees. Now, face value is 100. All of you can see here, face value is 100. So 5 rupees will be how much percentage? 5 percentage. 5 upon 100 face value into 100 to convert into percentage. In percentage, what is the rate of discount? 5%. Okay. 5% means option B is the correct answer. This kind of questions we have practiced earlier also in MCQ, so quite common to be asked in exams. Hidden goodwill in admission, then this rate of discount, 4 features, balance transfer to capital reserve or shown in balance sheet. These are quite common and expected questions in board exams. Okay, so do prepare for these short MCQs for your board exams. Now question number 5. At the time of admission of new partner Vasu, old partners, new partner is Vasu, old partners Paresh and Prabhav had debtors of 6,20,000 and provision for doubtful debts of 20,000 in their books. As per the terms of admission, assets were revalued and it was found that debtors worth 15,000 had turned bad. Now, how much provision was created last year? 20,000 for doubtful debts. How much actual bad debts have taken place? 15,000. Is this 20,000 sufficient to meet the bad debts of 15,000? Yes. 20,000 is sufficient to meet the bad debts of 15,000. Okay. So entire bad debts will be written off from provision for doubtful debts. Now, what is the question asked? Hence, should be written off. Which journal entry reflects the correct accounting treatment for above situation? First of all, what is the first journal entry for bad debts? Bad debts to debtors. Bad debts is a loss. Debit all expenses and losses. Bad debts account debit. Debtors decreases. Credit the asset decreases to debtors account. So bad debts to debtors you find in these two entries. This one is wrong and this one is wrong. So option A or B is the correct answer. Now let us see the second entry. Because 20,000 is sufficient to meet the bad debts of 15,000, this bad debts we will write off from provision for doubtful debts. To close bad debts we will reverse and credit it, and entire amount will write off from provision for doubtful debts. So provision for doubtful debts to bad debts 15,000. This is the correct answer. Here it is written from revaluation, that is wrong. Since provision for doubtful debts is sufficient, entire amount will be met from bad debts reserve or provision for doubtful debts. Had this been 25,000, then 20,000 we would meet from provision for doubtful debts and remaining 5,000 from revaluation. Then the entry would come revaluation to provision for doubtful debts with the excess 5,000 only. Here this entry is wrong. So entire bad debts will be written off from provision for doubtful debts because 20,000 is sufficient to meet the amount of 15,000. Option A is the correct answer. Sixth question. The profit earned by a firm after retaining 15,000 to its reserve was 75,000. Means before reserve it would have been how much? 75 plus 15, 90. From 90,000 we transfer 15,000 to reserve and the remaining profit retained or earned after transferring is 75,000. The firm had total tangible assets worth rupees 10 lakhs, outside liabilities 3 lakhs. The value of goodwill as per capitalization of average profits method was 50,000. Now goodwill as per capitalization of profits method is given, so we have to go backward, reverse. We have to go backward or reverse to find what? The rate of normal rate of return. First of all, what is the formula of goodwill by capitalized profits method? Let us do that. Goodwill's formula by capitalized profit method is equal to what? It is equal to capitalized profits minus capital employed. Capitalized profits minus capital employed. Now what is goodwill already given to you? 50,000. Goodwill's amount already given to you is how much? 50,000. So left side I can take 50,000 over here. Capitalized profits we don't know, but capital employed we can find from this assets and liabilities. Assets of 10 lakhs minus liabilities of 3 lakhs. So capital employed is 7 lakhs. What is this? Capital employed 10 lakhs of tangible assets minus 3 lakhs of tangible liabilities or outside liabilities. Okay, these are assets minus these are liabilities. That gives us capital employed. So goodwill 50,000 is equal to capitalized profits minus 10 lakhs minus 3 lakhs. What is the capital employed? 7 lakhs. Minus 7 lakhs on the left will become plus. So what are the capitalized profits? 50,000 plus 7 lakhs. 7 lakh 50,000. These are capitalized profits. Okay. Now, what is the formula of capitalized profits? Capitalized profits is equal to what? Average profits upon normal rate of return into 100. Okay. Using that formula, we'll be able to find normal rate of return. Capitalized profits equals to average profits divided by normal rate of return into 100. Now, capitalized profits, we got 7 lakh 50,000. That is equal to, now what are average profits? 75 plus 15, 90. Here these average profits are always the profits before transferring to reserve. And this 75,000 is after transferring to reserve. So the average profits before transferring to reserve must have been how much? 75,000 plus 15,000, 90,000 upon NRR into 100. So how will you find this normal rate of return, NRR? NRR would be equal to, this will come on the left side, 7 lakh 50,000 will come on the right side, 75 plus 15, 90,000. Okay, divided by 7 lakh 50,000 on the left side will come on the right side in denominator, multiplied by 100. Now 2 zeros cancel, further 2 zeros cancel, 900 divided by 75. So 25 into 3. 25 into 3, 75, 150, 25 into 6, 150, 360 divided by 3, 130 rather, 12. So what is the percentage? 12%. Okay, 90. So 36 divided by 3, 12%. What is the normal rate of return? 12%. What is the correct answer? Option C, 12%. See, normally if goodwill's question comes in exam, they will never ask you a direct question on goodwill, that find goodwill by average profits, simple weighted average, super profits, or capitalization of average or super profits. They will always give you such a kind of question only in MCQ, tricky one, where goodwill's amount will be given and either you have to find average profits, normal rate of return, capital employed. Either of the three things you have to find: average profits or normal rate of return or capital employed. Okay, generally you will find such a question in exams. Then question number 7. Mohit had applied for 900 shares. He applied for 900 and was allotted in the ratio of 3:2. He had paid application money of rupees 3 per share. So 900 into 3, 2700 is what he has already paid. And couldn't pay means could not pay allotment money of 5 per share. First and final call of rupees 2 per share. First and final call of 2 per share was not yet made by the company. Only till allotment they have called. His shares were forfeited. So obviously, when are they forfeited? After allotment. Okay, when are they forfeited? After allotment, because first and final call company has not made only up till now. The following entry will be passed. Share capital account debit with X, to share forfeited Y, to allotment Z. Now, how do you find these amounts? You are asked X, Y, and Z means these amounts, X, Y, and Z. How do you find these amounts? Share capital account we always debit with called up capital. Share capital account we always debit with called up capital. First of all, how many shares are forfeited? Not 900, because he is allotted in the ratio of 3:2. So if he applied allotted 3:2 ratio, if he has applied for 900, allotment would be done for how many shares? 3:2 ratio. 900 multiplied by 2 divided by 3. 900 into 2 divided by 3. 3 into 300, 300 into 2, 600. Okay. How many shares he would have applied for? He would have been allotted 600. Now allotted 600 and they are forfeited. They are forfeited because he did not pay the allotment money. He paid application money, but he did not pay the allotment money. So after allotment, his shares are forfeited. So how many shares are forfeited? Allotted 600 shares. This one's 600 shares are forfeited, multiplied by called up capital. Multiplied by called up capital. Now, how much company has called up? Application of 3 plus allotment of 5, 8. 3 plus 5. How much is called? 8 rupees. How much is called is 8 rupees. Okay. Share capital account we have to debit with called up capital of 8 rupees. So 600 into 8, we will debit it with 4,800. Share forfeiture is the amount paid by the shareholder. Now, 900 shares he applied and he paid application money of 3. So 900 into 3, what is the amount paid by the shareholder? That will be forfeited 2,700. What is the amount paid by the shareholder? That will be forfeited 900 into 3, 2,700. And share allotment with the allotment money not paid by the shareholder. Allotment is 5 rupees, but surplus money is left out. Okay, how much surplus money is left out? He was supposed to pay 600 into 3, 1800, but he paid 2700. So 900 surplus is left out. Now 600 into 5, allotment money is 3000, minus from that, how much surplus money is left out? He paid 2700. He paid 2700, but application money due was only 600 into 3, 1800. So 900 is already left out. Means 3000 minus 900, 2100. Okay. So 2100 we have to consider calls in areas in allotment which we have to close. So 4800, 2700 and 2100 means what would be the correct option? Option B. 4800, 2700, 2100. I'll just explain you this part once again. Okay. Share allotment, he has been allotted 600 shares. So 600 into 5 rupees of allotment, he is supposed to pay 3000. But he paid 900 into 3 of application, 2700. 600 shares were allotted into 3, 1800 only he was supposed to pay. Okay, 1800 only he was supposed to pay. So basically 2700 minus 1800, 900 is the surplus money of application still remaining with us. 900 is the surplus money of application remaining with us, that we will adjust with allotment money. Sort of allotment money due 3000, we will adjust surplus of 900, means what is actually amount not paid in allotment only 2100. Okay. So this kind of calculations you may be required to do in exams. Option B is the correct answer. 4800, 2700 and 2100. Question number 8, going further, look at it. A company forfeited 6,000 shares of rupees 10 each. Forfeited 6,000, on which only application money 3 has been paid. 4,000 of these shares were reissued at rupees 12 per share as fully paid up. Amount of capital reserve. Now just apply the formula. What is the amount of capital reserve? Amount forfeited or amount paid minus discount multiplied by number of shares reissued. Okay, multiplied by number of shares reissued. This is the formula we apply. So how do you find the amount of capital reserve? What is the amount forfeited or paid? Whatever amount has been paid, that is this 3 rupees will be forfeited, minus discount is 0. Because if you have reissued at 12 rupees, that means you have reissued at premium. You have reissued at 12 rupees against 10 means 2 is premium. Discount is 0. You are reissuing at premium, discount is not there. Multiplied by what are the number of shares reissued? Only 4,000 shares were reissued. Only 4,000 shares were reissued. So 3 into 4,000, 12,000 is the amount that will be transferred to capital reserve. Option B, 12,000 transferred to capital reserve. Remember this formula, it will help you a lot in this type of questions. And 100% guaranteed such a type of question will come in exams. But they may ask you capital reserve, or capital reserve may be given. They may ask you amount forfeited or reissue price. They may ask you discount. They may ask you even number of shares reissued. Any of the 1, 2, 3, 4 things they may ask you. What is this combined amount? Reissue price. Amount forfeited minus discount becomes the, not reissue price, sorry, that is a profit only. But even they can ask you the reissue price. So once you get discount in the question, suppose 3 rupees, then 10 minus 3 discount, the reissue price would be 7 rupees. So any of these three can be, these 3, 4 things can be asked in the question. But this formula will become applicable in exams for sure. Going to question number 9. On 1st April 2090, a company took a loan of 80 lakhs on security of land and building. This loan was further secured by issue of 40,000 12% debentures. Further secured by, see, you took a loan of 80 lakhs against land and building. Further you secured it by issue of 40,000 12% debentures of 100 each. That means collateral security. Okay, it's given as a collateral security. Now, on 31st March 2024, the company defaulted on repayment of the principal amount of this loan. Consecutively on 1st April, the land and building were taken over and sold by the bank for 70 lakhs. Now, loan was of what amount? 80 lakhs against land and building, which could fetch only 70 lakhs to the bank. So, how much is still the difference amount which the company is supposed to pay to the bank? 10 lakhs. How much is still the difference amount the company is supposed to pay to the bank? 10 lakhs. For the balance amount, that is 10 lakhs. This balance amount is how much? 10 lakhs. Debentures were sold in the market on 1st May 2024. Okay. From which date? Okay. From which date would the interest on debentures become payable by the company? All these amounts become useless. That's why in the first 15 minutes of your exam, always read the MCQs in advance so that you make up your mind what information in MCQ is going to be useful when you solve them. We are just asked from which date would the interest on debentures become payable by the company when debentures are sold in the market. When are the debentures actually sold in the market? 1st April 2024. So after that, 1st May, sorry. When are the debentures sold in the market? Debentures were sold in the market on 1st May 2024. So interest on debentures will become due only from 1st May 2024. Means option D is the correct answer, 1st May 2024. Then going further, 10th question. Rama, a partner, took over machinery of rupees 5 lakhs in full settlement of a loan of, 50,000, not 5 lakhs. In full settlement of a loan of 60,000. Machinery was already transferred to realization account. So again, now the loan will also be transferred to realization account. And how it will affect the realization account finally. Now, see, Rama partner took over the machinery. So if asset is taken over by the partner, what is the journal entry? If the asset is taken over by the partner, then partner is the receiver, debit the receiver, partner's capital account debit. Okay, partner's capital account debit. Okay, here partner's capital account is not given anywhere. And asset goes out, credit what goes out to machinery, but because machinery is already transferred to realization account, instead of machinery, we will credit which account? Realization account. And with what value? With the value at which the partner has taken over the machinery, which is 50,000. So realization account we will credit with the value of asset taken over, that is 50,000. Option C will be the correct answer. It will be credited by rupees 50,000. Okay. Whenever asset is taken by the partner, the entry is partner's capital account debit to realization account with the realized value of assets. Now 11th question. Dada, UV and Viru, Dada Saurav Ganguly, UV Yuvraj, Viru were partners, Virendra Sehwag, were partners sharing profits and losses in the ratio of 3:2:1. Their books showed workman compensation reserve of 1 lakh and workman's claim was 60,000. Is 1 lakh sufficient to pay the claim of 60,000? Yes. 1 lakh is sufficient to pay the claim of 60,000. Okay. How will it affect the books of accounts at the time of dissolution of the firm? Okay, at the time of dissolution, what we will do? The liability of 60,000 we will meet from 1 lakh and remaining 40,000 we will transfer to partner's capital account on credit side. So only 40,000 will be distributed amongst the partner's capital account, is correct. Only 40,000 will be distributed amongst the partner's capital account will be correct. Okay. 1 lakh will be credited to realization account is obviously wrong. Okay, workman's compensation reserve 1 lakh will not go in realization account. 60,000 will be credited to realization account as workers claim and will be even paid off, and balance 40,000 will be distributed amongst partners. This is also correct. Option number C. 60,000 of claim will go in realization on credit side as a liability and that will be even paid off. Only 60,000 will be credited to realization account and will be even paid off. No, 60,000 will be credited to realization account and will be even paid off. Balance 40,000 will be distributed amongst the partners. This option is to be fulfilled. Option C is the correct answer. Okay. Then going to further question number 12. So read it completely. Initially A looks good. Initially A looks good. But then that is only part of the information. 40,000, so definitely we have to credit to partners. But because 60,000 of workman's claim is accepted, that 60,000 will also go in realization on credit side and that is a liability, so we have to pay it off also. So this is correct, but it is only partly correct, partially correct. Okay, it is correct, but it is only partially correct. This is fully correct statement. So option C will be the final answer. It is a fully correct statement to be taken in exams. Then question number 12. Ikka, Dukka and Tikka were partners sharing profits and losses in the ratio of 2:2:1. Their fixed capital balances were, Ikka's amount is 5 lakh, Dukka 4 lakh, Tikka 3 lakhs respectively. For the year ended 31st March 2024, profits of 84,000 were distributed without providing for interest on capital. Past adjustment of profits. Error of omission, interest on capital has not been provided at 10% per annum as per the partnership deed. While passing an adjustment entry, which of the following is correct? So for that we'll have to make the entire workings. What workings? Ikka, Dukka, Tikka and also firm. Now, why do we have to make the entire working over here? Because only if you do it, though you are asked only for Tikka everywhere, you all can see. But until and unless you have the total amounts which we have to distribute between the partners, if you don't record all the three partners amount, you won't be able to do it. So even if any one partner is asked, basically you have to do the workings entirely. Here there is no shortcut which is possible. Okay. Now, error of omission, interest on capital we have not recorded, and that is at the rate of, what is the rate of interest on capital which we have not recorded? 10%. What will be 5 lakhs 10%, 50,000, 4 lakhs 10%, 40,000, 3 lakhs 10%, 30,000. 50,000, 40,000 and 30,000. Normally it is error of omission. So partners capital, we write the things on the credit side, and P&L appropriation in the firm, we write it on the debit side. So interest on capital 50,000 will come in partner on the credit side. Ikka, dukka, tikka, it will come on the credit side. 50, 40 and 30,000. Ikka, dukka and tikka, it will come on the credit side. Now 50 plus 40, 90 plus 30, 1,20,000 will come in the firm P&L appropriation on the debit side. Okay. And this itself balance will remain. So 1,20,000 balance amount remaining in the firm. It is error of omission. So only 1,20,000 will remain. This amount we have to distribute in profit sharing ratio, which is given 2:2:1. Okay. And it will come on the opposite side, 2:2:1, 2 by 5, 2 plus 2, 4 plus 1, 5, 2 by 5, 1 by 5. It will, if firm column it is credit, partners column it will come on the debit side. First 1,20,000 divided by 5 is 24,000. Now 24,000 into 2, 48,000. Firm credit, so partner debit, 48,000. Again 48,000. And 24,000 into 1, 24,000. Now you can do it only for the respective partner which is asked, since tikka is involved everywhere in the options. So just look at tikka, what is to be done in tikka's case. Tikka we have to debit with 24,000 and tikka we have to credit with 30,000. So 30 minus 24, what is the net amount? 6,000. Debit is more or credit is more? Credit is more. So tikka's current account we have to credit with, okay, tikka's current account we have to credit with 6,000 as per the difference. Why current? Because the capitals are fixed. Okay, current account because the capitals are fixed. So tikka's current account will be credited by rupees 6,000 is the correct option. Option C. Tikka is only given, even capital current is not mentioned, but in exams they might give you one option, tikka's capital will be credited by 6,000, one option, tikka's current account will be credited by 6,000. Since it is fixed capital method, current account. Okay. So read that properly in exams. Now question number 13. At the time of dissolution, machinery appears at rupees 10 lakhs book value. Accumulated depreciation for the machinery appears at 6 lakhs. Means book value would be, this is the cost. Accumulated depreciation is given, means it is the cost. So 10 lakhs minus 6 lakhs. Okay, 10 lakhs minus 6 lakhs. What would be the book value of the machinery? 4 lakhs. Cost of 10 lakhs. Accumulated depreciation of 6 lakhs. So what would be the book value of the machinery? 4 lakhs. In the balance sheet of a firm, this machine is taken over by creditor of rupees 5,40,000 at 5% below the net value. Again in 4 lakhs, 5% below the net value, it means 4 lakhs minus 5% if I do 20,000. 4 lakhs 5% is 20,000. So 3,80,000. The creditor has taken machinery at what value? 3,80,000. I repeat, cost 10 lakhs, accumulated depreciation 6 lakhs. So what is the book value of the machinery taken by creditor? 4 lakhs. He has taken the machinery at 5% below the net value, that is the book value. 4 lakhs 5%, 20,000 less, he has taken at 3,80,000. Against 5,40,000 he has taken at 3,80,000. The balance amount, okay, the balance amount of the creditor was paid through bank. Now against 5,40,000 we have paid him 3,80,000. So what is the balance amount paid through bank? Check it up. Against 5,40,000 creditor, we have paid 3,80,000 through machinery. So what is the balance amount we have to pay him by bank or check? 1,60,000. What is the balance amount we have to pay by bank or by check? 1,60,000. By what amount should the bank account be credited for this transfer? as we discussed, 1,60,000. Option B. Bank account will be credited with 1,60,000 for the balance transfer. Okay. Question number 14. Rahul, Samarth and Ayan were partners sharing profits and losses in the ratio of 5:4:3. Ayan's again fixed capital balance on 31st March means closing capital was 2,70,000. So closing capital is given means we have to go reverse and find the opening capital. Which of the following items would have affected this capital balance? Fixed capital is there. Because it is fixed capital method, which things affect the capital balance? Only if you introduce any additional capital, or there are two types of drawings. One is drawings out of capital, the other is drawings out of profit. If you have withdrawn out of profits, it will affect current account. If you have withdrawn out of capital, it will affect capital account. Or drawings out of capital means capital is being reduced. Drawings out of capital means capital is being reduced. Let's see, because it is fixed capital method, which all things will affect the partner's capital account? Profit or loss for the year? No, that will go in current account. Because it is fixed capital method, profit or loss during the year will go in current account. Additional capital introduced? Yes. Reduction in capital due to capital adjustment, there is drawings out of capital? Yes. So B and C both are correct, means option D, both B and C. Okay. Alone B and C is not correct. Both options are correct. So we'll go with option D, that is both B and C. Going ahead with question number 15. Shares issued as sweat equity shares can be issued at par, discount or premium. All the three. Par is also correct, premium is also correct, discount is also correct. So option C all are correct. What are sweat equity shares? Sweat equity shares are those equity shares which are given to the promoters. Generally promoters are the directors of the company, or under ESOP plan you can give it even to the employees, employee stock option plan. But how do you give it to the promoters or the employees of the company? In the stock exchange, BSE, NSE, suppose the stock is listed at 400 rupees. At 400 rupees. Now the face value is 10. Even if you give these shares at 100 rupees to your directors or promoters in the market, they are listed at 400. They are going to benefit only out of that. Immediately they earn 300 rupees out of the same. So even if you give at 100, you are giving at premium. Even if you give at 100, you are giving at premium. Okay. Even if you give at 10 rupees, you are giving at par. And if you want to give them much profits, then you can give at 5 rupees also, that is at discount. So sweat equity shares are issued to the promoters or the employees, but they are generally issued at a value less than the market value. However, that amount can be equal to face value. Market value is different, face value is different. So that amount can be equal to face value, less than face value, or more than face value. So all the three options are correct. Okay, but however it will be less than the market value so that they are at a benefit. Question number 16. 2,000 shares are allotted to Miss Regal, on which 80 each called up and 50 paid were forfeited and reissued for 70 each, 90 paid up. Amount transferred to capital reserve. Again, capital reserve is asked. Let's use the formula. Amount forfeited or amount paid minus discount multiplied by number of shares reissued. Multiplied by number of shares reissued. Okay. Now what is the amount forfeited or amount paid? Amount paid is 50 rupees, clearly given, paid, minus how much is discount? If you have reissued at 70 against 90, then 90 minus 70 reissue price, discount is 20. Okay, 90 paid up means 10 rupees we will call in future, final call maybe, suppose. Okay, right now the called up capital maybe by the company is 90 rupees, so they have collected rupees 70 against 90. Though called up is 80, but they have collected 70 against 90, which we don't know at which stage they are issuing. So you simply have to do 70 and 90's difference, discount is 20. Multiplied by what are the number of shares reissued? Okay, all the shares allotted 2000 are reissued. All the shares allotted 2000 are reissued. 50 minus 20, 30 into 2000 shares reissued. So that would be equal to rupees 60,000. That would be equal to rupees 60,000. Option B is the correct answer. What amount will be transferred to capital reserve? Rupees 60,000. 17th question. Joe, Sam and Tex were partners sharing profits and losses in the ratio of 5:3:2. With effect from 1st April 2024, they decided to share future profits in the ratio of 2:1:1. This is the old ratio. This is the new ratio. It will have some relevance. Let's read it out further. For which of the following balances tax will be credited? The main question asks this: which thing will be credited to tax at the time of reconstitution of the firm? If the firm decides, okay, this is important. If the firm decides to continue with the available accumulated profits and losses balance. Since firm decides to continue with available profits and losses balance, we have to pass the adjustment entry. Means in the balance sheet on the liability side, accumulated profits and losses will continue. So in the chapter of reconstitution, you have studied that if assets, liabilities, accumulated profits, reserves, losses, etc. are going to continue to appear in the balance sheet, we directly affect the capital accounts of the partners, which is called adjustment entry. Now, how do you pass that adjustment entry? If the overall balance is favorable, I repeat, if the overall balance is favorable, then the entry is just like goodwill, gaining partners capital to sacrificing. If overall balance is unfavorable, then the entry is reverse, sacrificing partners capital to gaining. Sacrificing to gaining. Now, since you are asked what amount tax will be credited, we just find out, is tax gaining or sacrificing? If tax is gaining, he will be debited. If he is sacrificing, he will be credited. Okay. Here credited what is given means taxes, sacrificing is also confirmed, because gaining partner we debit, sacrificing partner we credit in case of favorable balance. In case of unfavorable, okay, here we have general reserve 2 lakhs and profit and loss debit 1,20,000. Everywhere general reserve is given to you and profit and loss is given to you. Let's first find out, is he gaining or sacrificing, then we conclude. Okay. So for tax, let us do old ratio minus new ratio. Old minus new gives the sacrifice if it is positive, gain if it is negative. What is tax old ratio? 2/10. New ratio 1/5. 5:3:2. Old ratio of tax is 2/10 minus. Okay, 5:3:2. 5 plus 8 plus 2, 10. And new ratio 2:1:1. So 1/5. 2 plus 1, 3 plus 1, 4. Sorry, 1/4. Now LCM of 10 and 4 will be 20. 10 into 2 is 20. So 2 into 2, 4. 4 into 5 is 20. So 1 into 5, 5. 4 minus 5 minus 1/20. Since your answer comes negative, it is a gain. It is a gain. Now, since tax is gaining, what we are supposed to do? If it is credit balance or favorable balance, okay, then tax account will be like goodwill entry, gaining partner debit to sacrificing partner. If there is a debit balance or unfavorable balance, then sacrificing partner debit to gaining. To gaining means we have to credit him. Okay. Now let us find out what is the balances given to you. General reserve. Now see here, general reserve is a credit balance, favorable balance. Profit and loss debit is 1,20,000, unfavorable balance. So 2 lakhs minus 120 overall there is 80,000 of favorable balance. Overall there is 2 lakhs minus 120, favorable balance of 80,000. Now since favorable balance of 80,000, then tax would be debited. So this option is wrong. Why this option is wrong? Because in the question it is asked in which situation tax is going to be credited. In the first situation, 2 lakhs minus 120, overall there is a credit or favorable balance of 80. When there is a favorable balance, gaining partner is always debited, so not credited. We have to see when is the gaining partner tax over here credited. This is wrong. If general reserve is 2 lakhs, profit and loss credit is 250. So overall again there is a credit balance, favorable balance, 2 lakhs plus 250, 450. Overall favorable means again gaining partner will be debited, not credited. So this option is also wrong. I hope everyone is able to understand. Overall, if there is a unfavorable balance, then only the partner is going to be credited. So you just find out in which option overall there is unfavorable balance. Here overall there is a favorable balance of 2 minus 120, 80. Here both are credit balance, overall favorable 450. In both these situations, tax will not be credited, he will be debited. Deferred revenue expenditure is a debit balance, profit and loss credit. Now debit 50, credit 80, so still favorable and credit balance of 80 minus 50, 30. Here also tax is going to be debited because overall there is a favorable balance. Okay. Deferred revenue expenditure debit, profit and loss debit. So overall unfavorable balance. In this situation, tax is going to be credited. Okay. So in which situation tax is going to be credited? When overall there is unfavorable balance. That is in only last option. In the last option you find that there is deferred revenue expenditure of 50,000 and loss of 80. 1,30,000 unfavorable balance. $1,30,000 of unfavorable balance. So gaining partner in unfavorable balance will be credited and sacrificing partner will be debited. Option D is the correct answer. Question number 18. Rohit, Virat and Shikhar were partners sharing profits and losses in the ratio of 3:1:1. Their capital balances as on 31st March, end of the year, was 3 lakh, 270, 250. Rohit is 3 lakhs. Virat at the end of the year is 270. Shikhar at the end of the year is 250. On the same date, they admitted Hardik as a new partner for 20% share. Hardik was to bring 80,000 for his share of goodwill and 1/5 of the combined capital of all the partners of the new firm. What will be the amount of capital brought by Hardik? This we have done earlier also. Combined capitals, 1/5 amount is what he is going to bring. Combined capitals 1/5 amount is what he is going to bring. So let's first find the combined capital of all the partners, Rohit, Virat and Shikhar. Rohit's capital is how much at the end of the year? 3 lakhs. Then Virat's capital is how much? 2,70,000. And Shikhar's capital is how much? 2,50,000. These are the three old partners. Okay, instead of two, there are three old partners. Once again, what is the amount? 2,50,000. Okay, so 2,50,000. Three, 5, 7, 70, 8, 20 plus goodwill. Why? This we have done earlier also. I have discussed with you. If the new partner brings goodwill of 80,000, that will go in the old partners and sacrifice ratio. That means old partners capital is going to increase. So if he brings 80,000 of goodwill, their capital will increase, and after goodwill being credited to them in sacrifice ratio, their capital will become 9 lakhs. Their capital will become 9 lakhs. Okay. Now what is asked to you? If he brings 1/5 of the combined capital of the all the partners of new firm. Now, see, Rohit, Virat, Shikhar, and Hardik is the new partner. If he brings 1/5 of the combined capital of new firm, that means new firm's 1 minus 1 by 5, 5 into 1, 5 minus 1 by 5, 4 by 5 capital is of Rohit, Virat, and Shikhar. If new partner Hardik brings 1/5 of the combined capital of all, that means Rohit, Virat's, and Shikhar's share is 4/5 of the combined capital of all. Now their capital is 9 lakhs. Okay, their capital in the new firm is 9 lakhs, which is actually 4/5 of the capital of new firm. So what should be Hardik's capital? 1/5 of the capital of new firm. 9 lakh multiplied by 1 by 5 divided by 4 by 5. 9 lakhs multiplied by 1 by 5 and divided by 4 by 5. Now divide by 4 by 5 will become reciprocal. 9 lakh into 1 by 5 and divide by 4 by 5 will become into 5 by 4. 5 gets cancelled. So 9 lakhs divided by 4. 4 into 2, 8 lakhs. 8, 1, 0. 4 into 2, 8, 1. 4 into 2, 8. Then 2, 0. 4 into 5. So 4 into 2, 8, 1, 0. 4 into 2, 8, 1. Now 2, 0. 4 into 5. 2,25,000. What is 9 lakhs divided by 4? 2,25,000. Means what is the capital he is going to bring? 2,25,000. Okay. 2,25,000 means which option we will go with? Option A. So I hope everyone is clear how to solve such a question. Okay, what you have to do? First you find capital of old partners, including the goodwill what new partner is bringing, because that will also be credited to their account. And then if the new partner brings 1/5, you make an equation and solve it. That old partners ratio is how much after giving this much to the new partner. So if their capital is given to you, what should be the capital of new partner? This method always you have to use to find the capital of new partner. Okay. Going to question number 19. A, B, and C were partners sharing profits and losses equally. B died on 31st August 2023 and the total amount transferred to B's executor account was 13,20,000. B's executor were paid 1,20,000 immediately. Out of 1320, we paid 120 immediately. So balance 12 lakh remains payable still. Balance 12 lakhs will remain payable still. Okay. 13,20,000 minus 3,20,000. What will still remain payable? 12 lakhs. And balance was to be paid in 4 equal semi-annual installments. First of all, if you pay this 12 lakhs in 4 equal installments, 12 lakh divided by 4, what will be each installment's amount? 3 lakhs. And semi-annual means every 6 months. Semi-annual means you'll pay 3 lakh rupees after the date of death, which is 31st August, every 6 months. So after 31st August, September, October, November, December, January, February. 6 months get over in February end. You will pay the money on 28th of February or 1st of March. Okay. Semi-annually. Together with interest at the rate of 10% per annum. Now total amount of interest to be credited to B's executor's account for the year ended 31st March 2024 will be how much? Dear students, this question is supposed to be very important and critical. I'll explain you why. Okay. See, it is important because he has died in between the year. So annually, if we paid the installments, then also it is important. Semi-annual also it is important. Here he has died in August and first installment will become payable at the end of February or first day of March. So amount of interest will be different from August to February. Then you pay 3 lakhs out of 12 lakhs. So 1st March onwards you have to pay interest on 9 lakhs. Got the point, everyone? Understand this important point. He died on 31st August. So September to February end, you have to pay interest on 12 lakhs. Okay, then you pay 3 lakh rupees on 28th February or 1st March. So for the month of March, you have to pay interest only on 9 lakh rupees balance. Since we are asked till 31st March 24, till 31st March if you are asked, then what is the important point over here? September to February we have to pay interest on 12 lakhs. We pay 3 lakhs. In the month of March, we have to pay interest only on 9 lakhs. Okay. Now how will you calculate it? What is the rate of interest? 10%. So how will you calculate it? 12 lakhs into 10% into 6 by 12. Semi-annual installments. So September to February, we have to pay interest for 6 months. 6 into 2. What is 1,20,000 divided by 2? 60,000. Then you pay 3 lakh rupees of one installment. So after February end, the interest will be payable only on the balance loan of 9 lakhs. 9 lakh into 10% into 1 by 12. Now why only 1 month? Because we have to find till 31st March only. We have to find till 31st March only means for 1 month March, how much is the extra interest payable on 9 lakh is what we have to identify. So 0 over, now 90,000 divided by 12, that is 7,500. So till March, the interest would come to 67,500. In this year ending 31st March, we will be crediting 67,500 interest only in P&L, debiting P&L account with that. So 67,500 option B is the correct answer. This is an important question. Okay. It would not have been important if the partner would have died on 30th September instead of August. Because then September to March, as such the semi-annual installments becomes due on 31st March only. So directly you count 12 lakhs, 10% interest for 6 months. Here what happens? From August to March, you pay one installment at the end of February or first day of March. So September to February, the interest is to be calculated on 12 lakhs and then you pay 3 lakhs. So March month, one single month, you have to pay interest only on the balance of 9 lakhs. So it's an important question. Be very careful in exams with such questions. And the last one for today. In fact, all the MCQs will be over with this. Last one, 20th. String and Kite were partners sharing profits and losses in the ratio of 5:3. They admitted Spinner as a new partner. String sacrificed 1/4 from his share and Kite sacrificed 1/6 of his share. These two words are very important, from and off. What is the importance of these two words? If the word from is given, means the sacrifice is given directly. And if the word of is given, you have to multiply with old ratio to get the sacrifice. From, direct sacrifice, of, multiply with old ratio to get the sacrifice. Okay. What is asked? New ratio. How to find the new ratio? Simply do old ratio minus sacrifice. So string, kite and spinner. Okay, string, kite and spinner. String, kite and spinner. First, what is the old ratio of spring and kite? The old ratio between spring and kite is 5:3. You all can see here. What is the old ratio? 5:3. Okay. That means 5 by 8 and 3 by 8. 5 plus 3 is 8. Spinner is admitted. Now, with what share is spinner admitted? 1/4. No, nothing is given. It is just given that string is going to sacrifice 1/4 from his share. From means directly the sacrifice is given. String is going to sacrifice 1/4 from his share. But kite is going to sacrifice 1/6 of his share. Okay. Kite is going to sacrifice 1/6 of his share. Now, of his shares means 3 by 8 is 1/6. From means 1/4 is directly the sacrifice. But of means his own share, kite 3 by 8. Of that he will sacrifice 1/6. So 3 by 8 into 1/6. 3 into 2 is 6. 1/16. That becomes 1/16. Now this is 1 by 4. So 1 by 4, how will you make as 16 into 4 by 4? Just to make it equal. 4 by 16. So how much is string going to sacrifice? 4 by 16, which is as good as 1 by 4 from his share. How much is kite going to sacrifice? 1 by 16, 1 by 6 of his share. Now if you find the new ratio, old ratio minus sacrifice. Old is 5 by 8 minus sacrifice 4 by 16. Old is 3 by 8 minus sacrifice 1 by 16. LCM is 16. 8 into 2, so 5 into 2, 10 minus 4. Again 8 into 2, so 3 into 2, 6 minus 1. 10 minus 4, 6 by 16. 6 minus 1, 5 by 16. Now new ratio 6 and 5. And whatever they sacrifice will go to the new partner. 4 by 16, 1 by 16 will go to the new partner. Okay, new ratio is what is asked. So what is the new partner going to get? 4 by 16 plus 1 by 16. 4 plus 1 by 16, 5 by 16. Means what is the new ratio? 6 is to 5 is to 5. Okay, what is the new ratio? 6 is to 5 is to 5 means option A is the correct answer. Mainly you remember from means directly the sacrifice is given. Of means first you multiply it with the old ratio, then you get the sacrifice, then you minus from old ratio. So all the MCQs, all of you can go through all the 8 sessions of MCQs properly. Almost 135 to 40 questions of MCQ we have covered. And I am damn confident that beyond this type of questions, nothing can come in your board exams. If you master these 135, 140 questions properly, 16 marks are guaranteed in your exams. Now, part B of your exams, that is volume 3, analysis of financial statements. Those MCQs are going to be quite simple. So tomorrow we will be taking up with those particular questions in the next session. Watch the next video. Look at the next live session to cover part B, volume 3's MCQs. That will help you to score 4 marks in your exams. That'll be all for today. Bye everyone. Take care.